Hey guys, and welcome back to Memecoin Academy. On today's episode, I'll be giving you my monthly Bitcoin and altcoin macro analysis. Now, today's episode, we'll be going through a bit of data that's come out recently. We have the FOMC meeting and Jerome Powell's possible decision to cut rates in September. We'll also be going over the non-farm payrolls and the BTC1 chart, plus the 4-year Bitcoin cycle theory. If you like what you see today, please hit the like and subscribe button and follow our channel for more videos. Now, first of all, we'll start off with a Bloomberg article here, which is regarding the FOMC meeting. And Jerome Powell has come out and said that there will be possible rate cuts in September and then likely more moving forward. Now, rate cuts generally are a good thing for the economy because it's the easing of monetary policy, right? However, the one thing about this is it's an admission by the Federal Reserve that there is something wrong and they have to cut rates to try and fix it. So this generally isn't a great thing in the short term for the markets. Now, it isn't a great thing when it's backed up by a couple of other data points, right? One of which is US bonds, right? Treasury bonds. Now, if we have a look at history, right, we'll have a look at the, I'll put on some overlapping indicators here. So I'll put on the TLT iShares Treasury bonds, and then I'll also put on the S&P 500, right? Let's have a look at these charts, right? Now, have a look at this data, and we'll go on a weekly chart so you can get a better idea of what I'm talking about. Now, when there is a recession and when there is rate cuts, what you can see is that, let's go back to when, so 2020 is a prime example of it. We have the S&P 500 here in blue, okay? Now in orange, we have the US 20-year bonds. And in the middle, in the candles, we have the Bitcoin price. Now, what you can see here is when they cut interest rates in this period here, the S&P absolutely nuked, as well as the Bitcoin price, right? Now, what did the bonds do at that period of time? Well, bonds started rapidly moving up. Okay, now this is the spark that sets it off. Okay, when you see bonds going up when they cut rates, well, this is what gives you the massive sell-offs. And it's one of 3 times it's happened in history. It happened in 2000, it happened in 2007, and it happened here in 2020. Now, even though this was the pandemic, it still gives you a great indication of what happens when bonds go up when they cut rates. And what happens is massive sell-offs. So if we scroll forward to today and we compare where we are to what happened in 2020, as you can see, I'll just make it a bit clearer for you. That's probably better like that. Yep. Is that bonds are starting to move up, okay? As you can see here, bonds are just starting, they've been tracking sideways, going up and down, but they're just starting to pick up a little bit. And what's happening with the equity market and the Bitcoin price? It's starting to move down. Now, I'm not saying that this momentum is going to continue, but just in comparison, it gives you a good indication of where we could possibly be heading, right? And to add on top of this, we also had the US non-farm payrolls come in, and they were above and higher than expectations, right? So this isn't a great sign either. This isn't a great sign that, they're going to have to cut rates, and that bonds will probably continue to rise if unemployment continues to rise, because unemployment rate is a lagging indicator of how healthy the economy is. Okay, if the unemployment rate's going up, well, that means that the economy isn't in a great way. So they have to start doing something and start doing it pretty soon. Okay? Now, let's have a look at the charts again and we'll see how this is possibly going to affect the cryptocurrency market moving forward, right? Now we'll take off these tickers, and what I want to look at is the BLX chart, right? And on this chart, I've already done a previous video regarding the 4-year Bitcoin cycle theory, okay? And if you've watched that, you'll understand what these blue lines are and what these price and date ranges are. Okay, now I'll explain it to you again quickly. Now we'll go back to the very first halving, which is here in blue in 2012, and what we have here is this white line, which was the previous all-time high, and this blue box here, we had the blue line, which is the halving date, and then the date range pulled forward to when price broke through its previous all-time high. In this period, it took about 90 days, okay? 90 days for price to break through its previous all-time high. Scroll forward to the next halving, 2016. Previous all-time here. How long did it take price to break through? It took 231 days for price from the halving date to break through its all-time high, right? And let's say, for argument's sake, we consolidate that a bit further forward because it actually found support and held it. It's about 231 days here, okay? Oh, sorry, my bad. It's actually a bit longer, maybe about 280 days. So we'll just, anywhere between 230 to 280 days, give or take. But you get the idea. Now, if we look at 2020, it took from halving date to when it broke its all-time, roughly about 220 days, okay? Now, if we scroll forward, if we roughly average that out to say 230 days, that takes us to Bitcoin possibly breaking its next, the previous all-time high, which has already been broken, right? Already broke its previous one, which was the first time it's done it in history, right? Let's just say it breaks its previous all-time high, which was this one here from March. That should take us to roughly start of December, right? End of November, start of December. Now, even though this is just an average of the previous date ranges, it could happen a month sooner, it could happen a month after, or, who knows, it may not happen at all, we don't know. It's just probabilities, right? But it gives you an idea. Now, on top of this, what I want to add on top of this is the next date range I've got pulled down there, which is how long it took for the Bitcoin price from the halving date to when it reached its all-time high, okay? This one here reached its all-time high, roughly a year, 364 days, right? From halving to all-time high. This one took from halving, let's bring it right on there, to all-time high. What's that one say? Roughly 525 days it took, right? From halving date. Let's have a look at 2020. How long did that one take? Halving date to all-time high, 500 roughly 46 days. So what does that mean for this period here? Well, if we take our date range tool and we take it from the halving date and we take it out to an average of, let's just say it's 525 days. Oops. 525 days. That takes us to reaching a possible all-time high in September of 2025. So keep that date in mind. Now, that's still quite a while away, right? It's still over a year away. If price reaches an all-time high around that time of year. Could it reach it sooner? Absolutely. Could it take till September of the next year? Absolutely. No one knows, right? But there's still a lot of time for this to play out, which is the important thing here. So what I'm going to keep that in mind, and what I'm going to do here is I'm going to move to the Bitcoin chart again. we're gonna map this out, okay? So I'm on the Bybit chart on a weekly, okay? So I'm just gonna do some analysis here for you and see if we can get an idea of current price action and what it's gonna do moving forward. So I want to go. Let's have a look here. I want to go. Now this is a really high time frame analysis, right? So we're looking at data going back to the previous all-time high and prior, okay? Because this is going to give us a great idea of our levels. Now, I'm just going to go down to the daily chart for a second and have a look at this current range. Current range of where we are, okay? Bitcoin chart. Actually, what I'm going to do, I'm going to go to the CME chart. And I'm going to chart this out a little bit easier, okay? Because we have our CME gaps here, which haven't been filled. Now, ignore the other smaller gaps that I've got below. It's all these yellow lines. But as you can see on the CME chart, we have these gaps. And what is a gap? Well, it's the difference between the closing and opening price on the CME Chicago Mercantile Exchange, right? Which is closed in trading hours. You know, this is the US stock exchange. So it closes for trading. However, the Bitcoin price continues to move. But the CME chart, this BDC1 chart, will stop. So as it stops over the weekend, it creates these charts. And what you will find with the CME charts is these gaps generally fill. Not all the time, but they generally fill. Because once trading starts opening again, there's open contracts left down here that need to be filled. So what this could play into our current price action. Although we're going to use it as a definite, it's just gives it's good for reference. Okay, we're not going to trade off it alone. It's good to know that it's there and keep it in the back of your mind. So with this, what I can see straight up is we have this sort of broadening descending wedge here, right? Which is a meme pattern. It's once again, it's like the CME chart. It's not something I'll trade off alone, but basically gives you an idea of what's happening, right? So we have this broadening descending wedge, which is a bullish pattern. Okay, it's a continuation, right? So what generally happens with these patterns is you'll have the 5 touches. It'll come down. It'll consolidate. And then it should break up and move up. Generally. Doesn't mean it's going to happen, but it is a bullish pattern at the end of the day. So what I'm saying here is we have this gap here. So we'll mark this out with our fib retracement tool. We'll take it from low to high, and we'll see where the 618 comes in. Okay, the 618 comes in, and look where that comes in. Okay, the 618 comes in right in the middle of this gap. Okay, right in the middle of it. Now what I want to add on top of this is a fixed range volume profile of this range. So I'll take it from here across. Yep, okay. So as you can see, price has come up and it's rejected off its value area high, and it's come down. Now what we don't want to see, I should really bring that forward a little bit. So that's one pull there. What we don't really want to see is it losing this value area low, because that's not a good sign, because that generally means there's more downside. However, we have this 618 and this this gap here, right? So what we could see is it's still in this bullish structure in this pattern. So what we could see is it come down, lose the value area low, sweep under this, come back above the value area high, the value area low, sorry, and then come up and see then how it reacts at this level, okay? And you know where the value area high, this blue line, is at that point. And if it does reject from there, you know, it could come up, SFP that, and then come back down further. That's a possibility. We don't know yet. But what we want to see is we want to see this come back above, like I said before, and then head up. Now, this bullish structure, how would that play in? to our 4-year cycle theory. Well, let's have a look. Now, if we were to find, now remember how long it took on average for it to break its previous all-time high in the 4-year cycle theory, okay? So let's just take this off, take this drawing off, and let's see if this plays out where it could possibly head to. So we'll come down, sweeps this low, back above, finds support, and then goes. You know, this is, if it does that, look where we are. It breaks it just around that 230-day period. So that would play in quite well, don't you think, for a bullish scenario? Okay, so that's one possibility that could happen. Now, the other possibility is you know, Bitcoin loses this level and basically continues further downside. Oops, what am I doing here? Bloody hell. Now, get rid of these dots. Well, what could happen here is if you know, if we lose this and then come back down, well, we're heading down further, right? And that, we'll look at that in a second. So what we'll do now is we'll go into a higher time frame. I want to go into a weekly, okay? And I would like to put a fixed range volume profile on our previous range up here. So we have one there, okay? And we'll also want to take one from the very low, right, up into where we are now. Okay, now we'll get rid of this for now. Now, for continued downside, right, a big area of support you can see straight away is the top of this value area high and also the top of this value area high of this whole range, right? So if price was to move down, what we could see is we could possibly see price come down, you know, reject, come down, and as we move down, it could basically swing that level and then come back up, right? And then back into this range where we were here. That would be a very bullish sign. That is another outcome that could possibly occur, okay? Now, find support on top of this value area high. That's a bullish scenario as well. Fake out the bottom of this broadening descending wedge, you know, and head back up for further upside. Another possibility, right? Now, what about the downside scenario, right? What happens if bonds start moving up? You know, non-farm payroll goes through the roof, unemployment rate goes up, you know, and the markets start to come down. Now, where could we find support, and where could this possibly head to looking forward? Now, although I support the bullish scenario at the current time, it's all based on probabilities, and if we lose certain levels, well, then the probabilities change. Now, one thing to keep in mind, if we lose this value area high, if we lose this level and price comes down and rejects, our next level, big level of support, is this point of control, right? Now this takes us down to about the 28,000, 29,000 level. Is this scenario likely? Well, in my mind, it's not probable at this time, okay? Because it doesn't really fit into our cycle theory. If it moved down very fast, well, it possibly could. You know, if it had the same speed of, you know, the COVID crash, and let's just say something happens, you know, it just price just starts to, there's just massive meltdown or war or something. We could be down here by the end of this year, 6 months time, who knows? But this is one big line in the sand that we do not want to break, because this also lines up with the previous value area low. Okay, now if it breaks that, well then we're looking back down to these levels down here, around to the 15, these levels down here, right? But this is your worst case scenario. Doesn't really fit in the bullish case, but however, if the economy is in dire straits, well then this is a possible outcome, because the cryptocurrency market is so heavily correlated with the equity markets that anything's possible, right? So this is just something to keep in mind. If the world goes tits up, if interest rates come down in the short term, bonds go up, unemployment goes up, there's war, there's who knows what, well, the bearish scenario could play out. However, what I am looking for, and what what I'm favouring, is things to continue as they have done over the last 4 year cycles, right? So what that would mean, as I said before, was we could come down, fill this gap, come back up, come back above, and then we head up, right? Then we head up to new all-time highs, and we can take that up. And if we take that up, to give you an indication of time, right? Well, if we mark out September to the end of the year in December, price won't go up in a straight line, but if we move it around, price could come up to, by the end of 2025, we could be up in these areas. Now what we'll put on there is we'll do a Fibonacci expansion. So where is it here? True extension, there we go. So we'll do a 1-to-1 extension. Oops, get rid of that. Now what I want to do with this 1-to-1 extension, this will just give us an idea of where price could go. Okay, so what first of all I want to see is what once it broke above this value area high, this is back earlier in 2023, I want to take price from this low here and give you the 1-to-1 extension for this move up to where price could possibly go. So we'll take it from there first. Put the magnet tool back on. Magnet tool here. Oh, no, actually I got the wrong low, sorry. What am I doing here? Magnet tool, sorry, down here, this low here, right? And we'll take it from that low. Why didn't that work? There we go, got it on, taking that low to this high, and then we'll take it to this low here, right? And this should give us our fib extension of where price could end up. So that's 157,000. The 1618 is at 300. But we're just looking at the 1-to-1 at the moment, which is this level up here. So there's one possible all-time high price around, the end of next year. 3rd to 4th quarter next year. Could it happen sooner? Sure. But for the sake of today, this is what we're looking at. We'll do another fib extension, right? And I'm going to do it from the actual previous low. Actually, I'll get rid of this extension. And then I'll just get rid of the drawings for now, just so you can get a better idea. Scroll in a bit. Okay, so we'll take it from the very low, right? So we'll take this 1-to-1 extension from this very low to this point here, very point top there, to that low there. And where does that one take us? That one takes us to a 1-to-1 extension of 269,000. We've got two all-time high possibilities here. One, 150 to 160. Another one, 260 to 270,000. These are your 1-to-1 extensions. okay, of possible bullish scenarios, which could play out within the next 12 months, okay? So if we take 12 months from here, you know, we sweep this CME gap, we come back above, we come up, here we go, we're going, 2024, you know, we're still going, price is still going up, you know, you get the idea, right? This is where we could be heading if the bullish case plays out. If not, and the macroeconomic conditions aren't favorable, well, you know, the opposite is losing these levels, coming back down, possibly bouncing, hopefully reclaiming this value area high and then going, right, to then put in an all-time high. That's a very strong possibility as well. Do we come back down here? Do we have a bearish scenario, sweep this POC? Do we have another bullish scenario that takes us down? Another bullish scenario is that we could revisit the top of this value area high. You know, come down, sweep under, find support here, then come back and then go. Right, that'd bring us back down to this 49 period. Another small CME gap there, top of the previous value area high, top of this value area high of this range, and then head up. Another, you know, if that was to play out, you'd probably be looking at this 150,000 scenario. But if it broke out sooner, you could be looking anywhere from the, you know, the 157,000 scenario to up to your 270,000 scenario. Okay, and that would play in very well with, from the halving date, 525 days forward to roughly all-time highs. Okay, if not, well, we could be coming back down here, and even worst case again, back to these levels. And if we're coming down there, well, you know, who knows what's going to happen moving forward. Could we still reach an all-time high? Absolutely, after that, but we'll have to wait and see. So guys, I want you to keep your eye on the data that's coming out, what's happening with the economy, you know, what's happening with interest rate cuts, and what's happening with the bonds. Are they going up, right? You can just look at the TLT chart here. This is it here, the iShares chart, and just overlap it. This is on TradingView, and overlap it with your other charts. You can say, you just pick, say, S&P 500 and just new price scale, add it on. There it is. Okay, and you can just map this out yourself, right? But keep an eye on that. Keep an eye on the interest rates, the non-farm payroll, the jobs numbers, and just what the general sentiment is. Okay, and remember to protect your capital at all time. Protect your capital. But the thing is, if we start getting some bullish momentum, and the 4-year cycle theory plays out again, well, the next 12 months are going to be glorious for all crypto investors. Okay, so I hope you enjoyed that today, and I hope that was helpful for you, and I'll see you on the next one. Thanks again.